and I'm going to go over the preparing for your filing your 2020 taxes. And most of you, like we said, has probably done that or almost have it completed, but we're just going to do a short recap here on your tax filing for 2020. So first of all, here's the brackets. So again, these were changed with the Trump tax cuts. The 10% tax bracket was introduced. So that put low income people in a lower tax bracket. So that was a good thing. But you can see that we now have basically 7 levels of tax brackets down the left side, starting at 10% all the way up to 37%. And what's interesting is when you look at these brackets, you notice there's a couple of spots where there's a big jump. There's a big jump going from the 12% bracket to the 22% bracket. And that jump takes place for a single person at $40,125 of annual adjusted gross income. And for a married couple filing jointly, that's $80,250. Everything above that now jumps from 12% taxable to 22%. And then the next big tax jump I see is from 24% to 32%. So a single person making over $163,000 a year will pay an additional 32% on every dollar over that, just like a married couple filing jointly starting at $326,600. And it goes all the way up to 37%. And so what I did is I did a little calculation just to kind of see, because there's tax brackets, and then there's your net effective tax rate. And how do we calculate that? And I'm going to keep it simple by staying on the single side of this equation on the brackets. And let's say a single person makes $100,000 a year after adjustment. So their AGI, adjusted gross income, is $100,000. That means on the first $9,875, they're going to pay 10%. On the next $30,000, that 12% bracket, they're going to pay 12%. The next $45,000, they're going to pay 22%. And that final $15,000 falls into that 24% bracket because $100,000 falls between 85 and 163. Okay, so you see that? Now, when you add up 10% of the first bracket, 12% of the second, 22% of the third, and 24% of the fourth, a single person making $100,000 a year is going to pay about $18,079 in federal taxes with an effective rate of about 18%. So that's the blended rate. So that's how your taxes are calculated, and we wanted to point that out to you on this chart. Moving forward, we're going to talk a little bit about standard deductions. Standard deductions also changed significantly with the Trump tax cuts. We used to have a personal exemption and a standard deduction. The personal exemption, as you can see at the bottom, has gone away. There is no more personal exemption. However, the standard deductions were increased significantly. If you look at a single person back in 2018, their deduction was $12,000. It's increased $200 a year up to this year being $12,400. A married couple filing jointly in 2018 started at $24,000 for their standard deduction, and that grew by $400 a year. And in 2020, your standard deduction is $24,800. So let's talk a little bit about itemizing deductions and things you need to gather putting your taxes together. It's very important that you have and keep these records, because these are backup records to your tax return, your pay stubs, any mortgage payment records. If you bought a home, your closing paperwork, receipts for items or services that you may want to be able to claim as a deduction. Again, get with your CPA or your tax preparer. They will help you with which of those deductions you qualify for. And your records on charity giving and donations. Let's keep moving forward. Mileage logs on cars used for business, business travel receipts, credit card and bank statements to verify those deductions, medical bills, Your 1099 forms for state and local taxes, you get to deduct. And you have to claim dividend and other income off of 1099s. So all that gets included in the things you need to gather and put together. Also remember that the IRS has revamped the way itemized deductions can be claimed on Schedule A. You get that personal deduction if you're single of $12,400 or married filing jointly of $24,800. But if you feel that you can go above that, and for every dollar above that, you get to claim on your itemized deduction. So that's where your CPA or tax preparer will do the calculation for you and tell you, do you qualify for Schedule A or just the standard deduction? So we got to remember that changed quite a bit a few years ago. So what all other changes have taken place is the itemized deductions are not limited if your adjusted gross income exceeds a certain amount. There used to be a cap on it. There's not a cap anymore. The second point is job-related and other miscellaneous expenses can no longer be deducted. Third point, certain other expenses such as gambling losses can still be deducted just in time for gambling being legalized online in Michigan, and you're starting to see all kinds of ads for that. And the final point here is the charity, cash charity contribution limit is 60% of your AGI. So if you're giving big to one organization or multiple organizations, you're giving cash donations, you're limited based off of your AGI at 60%. Also, you may no longer deduct moving expenses unless you are an active military person. So that was a big change too that has taken place. The child tax credit remains at $2,000. This did not increase. However, they did add the ability for you to get an additional tax credit. The $1,400 applies when taxpayers are unable to fully use the $2,000 non-refundable tax credit to offset their taxes. So there is a way to get a little bit more there, even using the standard deduction. And then the credits phase out at income thresholds of $200,000 single or $4,000 married filing jointly. So you don't get any child credit if you're above those thresholds. Just a reminder on what the 401k contribution limits were for 2020. Employees could contribute up to $19,500 to their 401k plan. Anyone age 50 or over was eligible to add a catch-up contribution in addition to the $19,500 of $6,500. And in total, if an employer was matching or contributing to your 401k, the limit for total contributions is $57,000 or catch-up of $63,500 for last year. On IRAs, a little different situation on the IRA contribution limits. On IRAs, your limit was $6,000 per person, $7,000 if you're age 50 and older. So that was unchanged from 2019. The Roth IRA contributions limits are reduced or eliminated at higher incomes. So, and again, this is a combined contribution, Roth or IRA. You're limited to the $6,000 total. Traditional IRAs are deductible, but the amount you can deduct may be reduced or eliminated if you or your spouse is covered by a retirement plan at work. So you have to take into consideration, are you already in a 401k plan? And then there is a lower income taxpayer may be eligible for the saver's credit if they contribute to an IRA. And again, your tax preparer or CPA will help you if you qualify for that. So one other thing to do is take a look at your last year's tax return and look to see if there's any opportunities. Take one more look, because you actually can still contribute to your 2020 IRA through April 15th of this year. That did not end in December of 2020. So that could lower the amount of tax you have to pay this year. So you need to take a look at that before you make your final filing. Also, we're going to throw an idea here. So for people, because the deductions have increased so much, many people do not qualify anymore for itemized deductions. because their interest on their mortgage, their property taxes and stuff are low, and your personal deduction of $24,000 for a married couple, you might not reach that number. However, think about bunching your charitable contributions. And what this basically says is if you give X amount of dollars to an organization, look at pulling next year's contribution into this year and doubling it, which may then qualify you for itemizing this year. And then next year, taking the standard as opposed to taking the standard in both years. Again, talk to your CPA and ask about that. Should I pull ahead some deductions? And would that make sense for me over a 2-year period? So capital losses, just a reminder that if you have losses in the market, that you can claim those. They have to be in excess of your capital gain, so you have to do the offset. And the maximum you can claim in the year is $3,000 if you're married filing jointly, or $1,500 if you are filing separate returns. Just a reminder too, though, let's say you had a $30,000 net loss in 2020. You would be allowed to take $3,000 of that $30,000 every year over the next 10 years. So that's how you can apply it in future years. But you're limited to just the $3,000 in the current year. Some important dates, we're already past January 15th. So if you were self-employed, you should have paid your final fourth quarterly estimated taxes by January 15th of this year. The next key dates are April 15th, a few things happening on that date. Your return is due, or your extension. If you're filing an extension, that extension must be filed, and your proposed tax also needs to be filed at that time, even though you're not going to do your final return because you're filing an extension. And also on April 15th of this year, your first quarter estimated tax payment is due. So a lot of taxes due on that day. And it's also the last day you can make a contribution to your IRA or Roth IRA. And you need to note that when you turn that into your investment advisor, that you want that credited to 2020. That has to be noted so the financial institution knows how to apply that investment. Upcoming in June, your second quarter estimated tax payments are due June 15th. September 15th is the third quarter estimated tax payment due. And then October 15th is the extended individual tax returns are due. So if you filed an extension, this is your final day, October 15th, 2021, to get in your 2020 tax return. I know I covered a lot of stuff there.
Yeah, taxes.
Isn't this fun?
Yeah, if you are working with our CPAs, whether it be Brenda Hunter CPA or whether it's Guy Cagle, they have a form that they send out to their existing clients that gives you a list of everything that you want to be looking at for your tax returns. So take advantage of that. It just helps you check off the boxes to make sure you've got everything taken care of the way you need to. And it works. I mean, it helps. I was looking through their form 2 days ago, getting all my tax stuff together. And there was a couple items on there I forgot about, and it helped me remember. So it's helpful. If you need a copy of it, we have copies, or you can get them directly from your CPA because they do have them. And again, if you're already a CPA or you're already a client of that specific CPA, they will send you or already have sent you out that document.